Welcome back to Golden Rule Radio in this exciting week that we have with Powell keeping the interest rate flat and gold catching the wind in the sails. The dollar is down. What are we going to talk about this week, guys?
I want to know how those guys get that job. I mean, right? They show up to work one day a month, tell you they're not going to do anything, take their paycheck and go home. So I'd love to be a Fed Reserve analyst or member of the Fed Reserve chair board.
At least now they're going to, be required to speak to the public, 8 times a year instead of just quarterly. Powell just, earned himself a pay raise. He did actually say that. He came out and said, from now on, I'm going to touch base with you personally 8 times a year.
Can't wait.
Yeah.
So many important words coming out of his mouth and in the minutes.
Dude, those aren't the important words. It's the ones in between the minutes where they're moving the markets. Those are the important words.
And the words that he doesn't say.
Also very important.
On the non-announcement, we definitely had some market moves today. So starting out with gold. Gold, we did... Last couple of weeks, I've been saying, the longer we hold here just below 1,300, the more likely we are to see a correction back down. And if we were going to push up, we needed to move above 1,310. So any of you that tuned in last week, we record on Wednesdays and post our shows on Thursdays. And Thursday, gold moved up to 1,310 or just below it. So here we are on the Fed announcement. Pushing up around 1,320, and that gets us to the high point, which goes back to about May of last year, around 1,325. So again, I'll say the same thing. I think we could see some resistance in here. I pulled up the RSI, the Relative Strength Index, just to see how that'd been looking in gold, and it's definitely on the overbought side. So we could see a little bit of a correction here in gold, 1,325 back down. What do you guys think?
2 steps forward, 1 step back is fine. You guys have been calling for months for us to eventually break through 1,300, go up to the 1,360-ish range, test those 2018 highs, and then expect some further resistance there. So it's okay, right, to take a little breather. I think you're going to see that on an intraday standpoint, we actually got 1,324 on the ask today. You may have already seen that 1,325-ish resistance, Miles.
Sure, and there's nothing between here and there. I mean, 1,325 was the last rung on the ladder before we get back up to the 1,360s, 1,370s. So this could end up playing out a lot quicker, and just like last year and the year before, we could have a pretty good spring high where we're testing the old highs, and eventually, the nut will crack. Eventually, we push through that, and we start testing 1,400.
That's what we need. To go back and retest the old highs is one thing. To break through them and then go flirt with 1,400, now we're talking about new territory. If we break through 1,400, I'll be twice as excited as Robert's, wind in the sails at 1,300. Again, very positive. I love it. That being said, 1,400 and above is when we'll know that we're really going to see some action.
Yeah, I like it. I like the strength in gold. Don't you guys listening? We also like the strength in silver. Silver's pushed up above 16. So again, 2 steps forward, 1 step backward. We will not be surprised if we do see a little bit of a pullback from here. But the strength with all the things going on in the world, the strength in the metals is very encouraging to people invested, like I know a lot of you are listening.
Yeah, with silver actually going up to as high as 16.18, I think I saw today. We'll see what Thursday brings, but that's actually narrowed the ratio, which means silver has outperformed gold. Gold's getting all the attention in the media, right? But silver's performance has actually narrowed that ratio down below 82 to 1. We're in the high 81 to 1 range. Again, that'll start getting exciting when we're, talking in mid-70s.
Sure, and as I like to do, looking at the fibs on that silver price, I mean, we are back up to right at that 618 fib at 16. So a few more stopping points up above us, but ultimately we really could this spring, as gold is pushing up back into the mid-13s, high 13s. Silver, the jump up's big. I mean, the jump going from 15 to 17 or 1750 percentage-wise is a pretty big jump in silver over the course of a few months.
It is.
And that's where that ratio ends up becoming a big deal. Mm-hmm. We've seen 80 to 90 ratio for quite a while here, and we've been encouraging people to look at a heavier silver position in their portfolios, just like platinum, that we'll get to here in a second. So even though we're seeing the price of silver go up, as that ratio starts to decline, if you're sitting on the fence waiting for dollar pullbacks in some of these metals, care more about the ratios than the dollar price.
But speaking about the dollar price, the platinum price does look like it's held the bottom. It looks like a nice little rising trend line along the bottom. High 700s. It didn't violate the previous lows, and it's started to move up with gold and silver. So I like the platinum action also.
I totally agree. And anything above 800 to me is a feel-good number. And the further we separate from that $800 mark, we're in the 820s now. That to me is exciting, and it doesn't mean that it's narrowed the gap with palladium, because it continues to do what it wants to do. Platinum goes up $5, palladium goes up $7. So proportionately, we haven't narrowed there like we've seen in the gold-silver ratio. But that being said, platinum, it's about time.
Moving over to palladium, it's in a world of its own, just like Miles, and he wants to brag.
Hey, you can mock me all you want, but it's pretty difficult to look into uncharted territories, make something up, and have it be right. So yeah, I'm going to brag about my 1430 call a couple weeks ago, because we did come right into it. And Robert, you did say, and I completely agree, it has seemed like every time we go up $5 in platinum, we go up $10 in palladium. Not the case this past week. So that ratio has tightened too. Palladium did come up into that 1430, 1431 number, has come back down pretty substantially, while platinum has come up on the bottom end of its trend line. So certainly not saying that 1430 is the ultimate high in platinum, but with some of the fib levels on there, it made sense to me. So I always feel good when that stuff plays out the way I want it to. So we could continue to stair step up in palladium along with all the other metals, but my money's still going to platinum. Platinum and silver is still where I'm looking to put my investment money in the precious metals right now.
Well, how about the other markets, Miles, since you've been on it? Tell us where you think the Dow industrials are going.
With the dollar continuing to fail on finding some footing here, lows and highs between 97 and 95 so far this year. So with that volatility in the dollar, and obviously the Dow hitting that pretty tragic bottom back in December, back up to the 618 fib, right around 25,000. It's earnings season. So it's not surprising to see a little bit of volatility here over the last week. So we've been bouncing between that 618 and that 50 for a couple weeks.
And you're going to see resistance, I guess, right in there because of its technical 618 fib bounce off the bottom. Where we go from here?
Have we, who knows, but have we corrected enough? The global equities markets have declined by over 26%, over the course of the last 12 months. Is that enough of a correction? Is there more to come? I don't know. Miles, you allude to this week's news. We've got, the February 1st, this Friday, the jobs report comes out, and you've got other critical earnings that you guys allude to, and then obviously other economic data. But all that being said, short-term moves, but the macro, I'm wondering, is there a global market concern still? Because the last one was stimulated more by China, Asia, Europe, emerging markets. Not necessarily the U.S. market. We did see it follow suit, but that's a huge correction, 26%. And, maybe the world's waiting for it to start to turn and go back up and we follow.
Sure. Well, with the issues in South America and obviously the Brexit vote and everything else going on overseas, having some money move into the U.S. markets isn't surprising, especially following that type of correction.
Good point. And with Venezuela, there's, as we transition a little bit here to news, obviously we're getting sanctions now. We're really trying to squeeze their oil revenues. That's got, South America concerned. It's got Venezuelans concerned. It's obviously got Maduro concerned, which is the whole focus. And if we're able to pressure him enough to allow this soft coup to take effect, the United States has basically come out and said, look, we're not going to recognize you anymore. You need to let the passing of the crown, if you will, transition slowly and gently, but yet we're done dealing with you. And so we hope that it doesn't come to some sort of conflict that involves troops or arms or anything like that. But you can be guaranteed of Russian meddling and resistance from other communist countries. And at the same time, you can be concerned and convinced of the fact that Maduro will resist.
Looking at where Venezuela is today versus where it was, 2 or 3 months ago when they were requesting their gold back from the Bank of England, and the Bank of England sought to clarify what Venezuela wanted to do with the gold. I mean, look at that. We talked about how that was somewhat of a, controversial standpoint between one country requesting their gold back. Well, what do you want to do with it? well, does the Bank of England have control of their gold, or does Venezuela own the gold? So the question, we raised that a few months ago. Now look where we are. I mean, what if the Bank of England had delivered their gold back to Venezuela? Where would that gold be? I think it illustrates that bad behavior is not going to be tolerated in the global scene, and that there is this kind of power play between different worlds, different continents. I mean, that kind of is saying either play our game or you're not in. We're not going to tolerate you. We're going to take you out of power. I mean, the U.S. has obviously done that in other places in the world.
Robert, I mean, the U.S. has done that for a century through the U.S. dollar. I mean, that's the strength and beauty of the world reserve currency. You don't get to play if you don't play through the U.S. dollar. And, it used to be gold, and it used to be the British pound, and it's the U.S. dollar. So I think that you're nailing it on the head.
It all is kind of connecting here with who's in control, who's going to make the rules, are you going to play by the rules? And I mean, it's just forcing you into a pigeonhole where you have to behave a certain way where you don't have privacy.
In the meantime, oil, whether it's because of the Venezuelan pressures or not, talking about wind in the sails, oil's got it. As long as we stay above the $50 mark, that's solid. We're at 54 today, and good to see it climbing and having some legs as well. And before I think we check out today, I do think we need to sort of summarize the Federal Reserve announcement in a little more detail other than just leaving rates alone.
Sure.
So target benchmark rate, 2.25, 2.5. We mentioned that already. The big thing, though, is the continuation of allowing assets to roll off the balance sheet without being replaced, up to $50 billion in assets, $30 billion in treasuries, $20 billion in MBSs, mortgage-backed securities. So this is against the Trump policy, and certainly also would have been against Obama's policy, who are both in favor of inflating and spending.
Yeah, it can be economically stifling, right? So I get it, but you can't just keep kicking the can down the road. And Robert was pointing out earlier, they've already reduced the Fed balance sheet by $500 billion. So
short-term economically stifling. I think in the long run, obviously this is a better policy for any of us who sit more in the austerity and Austrian side of the argument.
And even with the $500 billion reduction, they're still 4 times higher than they were less than 12 years ago. I mean, $800 billion, right before the financial crisis. Now they're looking at a balance sheet of around $4 trillion. I mean, where is the target for the Fed to reduce? What did they didn't really provide the target of what they were going to reduce it down to, did they?
No, I think that they would like to get back to $1 trillion, back to where they were, prior to the economic crisis, really ramping up. But you remind me of an episode I was watching the other day. It was from 2012, and it was actually in laughter, alluding to the re-election campaign of Obama, and they were talking about how incredible it was that he had allowed the national debt to go up to 16 trillion. And that was in 2012, and we're now at 22 trillion.
21.9.
Yeah, you're talking 6.5 years, 6 years, and you're up 6 trillion.
But yeah, you have all these candidates for president wanting to give out all these freebies that, that where does that get?
They want to do away with the debt ceiling.
Yeah.
So that's what's coming to a country near you.
Yeah. That does it for this week. Thank you for listening. You can follow us on Twitter at ICA Gold, like us on Facebook, McAlvany Financial. All of our information is at our website, McAlvany.com. And you can always call us to consult with us personally at 800-525-9556. Thanks for listening. Have a great week.